Good morning, afternoon, or evening, security traders. Welcome back, guys, for another daily cryptocurrency market update. Every single day, for anybody new around here, we release a video at 1 p.m. UK time where we don't just look at the cryptocurrency markets, but we look at where it is in relation to everything. And we try and work out where we think it's going and talk about some of the relevant things happening within this industry and also elsewhere. And we're going to be doing that in this video. It's going to be predominantly focused, of course, on the crypto space. Yesterday, we had some huge news. I didn't expect it to come yesterday. However, I did expect the SEC to eventually go after Binance. We had some news that the SEC charged Binance with 13 different complaints. They also mentioned within the lawsuit, think it was over 10 coins that they called securities. We're going to be looking at all that. We're going to be looking at what's actually taken place. The main objective of this video is to objectify the situation, to look at it objectively, and to look at how bad it is, how bad potentially it isn't, what the ramifications of everything are. Look at some clips actually from Gary Gensler before he became the chairman of the SEC, talking about the cryptocurrency market and saying, look, three quarters of this space are not securities and the securities laws are irrelevant. However, he's done a 180. I think he is working not for the masses, but for his special interest friends, and ultimately stalling this industry so that they can come in and take it over, certainly in the United States. I don't think it should really be much of a surprise to anyone that the SEC is being this hostile towards the cryptocurrency market. You know, when you understand what the blockchain industry is really doing and how it revolutionizes many sectors, many financial, many social, this is a threat, I guess, to the United States as a powerhouse. However, it doesn't need to be. They could embrace it, although they've chose to actually fight it. We even see and have seen more friendly regulations coming out of China recently than the likes of the United States. And you'd have thought after the absolute spanking Gary Gensler got in front of the Congress, that he would have maybe changed his tune, but still arrogant as ever, is pursuing the cryptocurrency market in a hostile way. And actually, it's not protecting, as a crypto investor, do you feel protected by this individual going after one of the most upfront, transparent, and honest exchanges that there's been, that there hasn't been issues with? They've honored all withdrawals. CZ is nothing but a champion for the crypto space, guys. It's just absolutely ridiculous. So we're going to break it all down. I want to start the video off by looking at things objectively. Yesterday, lots of titles flying around saying the largest outflows this year. We're going to look at it in historical context. We're also going to look at the charts. Remember why we took a long stance on the crypto space at the start of the year, and has anything changed in that realm? This was a crypto-specific issue that, of course, affected the cryptocurrency markets. I think it was massively, massively over-exaggerated. For me, it's just created a buying opportunity. But always remember why it is we're long in the first place. Why did we get back into the market at the start of the year? It's because we saw macro changes occurring that we think we are still on track to receive. We don't think the Fed is going to do another rate hike. They may. We did see the Royal Bank of Australia, I think, up rates, even though they were set to pause. However, if you get that pause in rates, we think markets do well, regardless of Gary Gensler's childish actions towards the crypto space. But let's dive into it all. We're also going to look at how this, as the macro changed, anything changed, really try and objectify everything. Bitcoin, crypto, what happened yesterday? Well, let's look at the daily candle. This was the daily candle that you got just as the news broke. And the news that the SEC were charging Binance was given to the media before it was even given to CZ or anybody that worked at Binance. It's downright disgusting, the manner that they're going about this. And actually, even further than that, they are trying to literally smear Binance's image. This was posted by the SEC and Gary. This is just childish, guys. We are operating a FKING unlicensed securities exchange in the USA, bro. This is from 2018, probably taken completely out of context. But this is a complete smear campaign for Binance. But focusing on the price, we were at these levels literally a couple of weeks ago, guys, and that was without any of this news. Is it really that bad? We saw lots of bears claiming victory. We've always spoken and said, look, after a 30K touch, potentially there's going to be a 25K retest after you've broken that neckline. Trend lines, once you break them, typically you do come back to them, or it happens a lot, something you should watch out for. They can provide great, second chances, if you will. But ultimately, this is still in play. Is the situation that bad? Bitcoin probably at 30K was due a pullback. This is part of that pullback. And it's in the same situation. Yesterday, we looked at the fact that is the stock market leading the cryptocurrency market? It has done really since November. Of course, we didn't appreciate that, again, because of FTX. Exchanges are becoming a bit of a bugbear. However, you can see this resistance is acting exactly as that. And yesterday, we did look at is the stock market leading the cryptocurrency market, and potentially, you've got this kind of inverse head and shoulders across the board. Nasdaq's significantly higher. Could be putting in a bit of a double top here, having a bit of a rest. That, of course, is going to bring a bit of downdraft with crypto. Also, S&P, which we think can go higher under the context of sideways rates. We've shown you this all time and time again. Has the macro changed, ladies and gentlemen? Has the reason why we're actually long the markets changed? The answer is absolutely it hasn't. The only thing that's changed is Gensler, which hasn't really changed anything, is suing Binance, which is probably one of the most anticipated things ever. It was a total market overreaction. And lots of people asking me if Binance is safe. I cannot 100% guarantee that there's not going to be an issue with Binance. But I can say so far we've seen nothing but resilience, strength, and honesty out of Binance and CZ. They've honored what most cryptocurrency exchanges could not handle in their wildest dreams, even if they wanted to. Transactions. That was with BUSD, which CZ said, okay, well, that's the rules. We'll move away from it and we'll look to do something else. But back to the point that I'm talking about, the stock market, Apple went on and put in a new all-time high. It's likely going to pull back, just like gold, which is consolidating on this bull flag. We think it goes higher, but we do think market's set to go higher under the context of sideways rates. Crypto will follow. And this actually, I don't think, has largely affected anything. Bears claiming victory after getting wrecked for the past 6 months. Bitcoin's still 67% up. Some altcoins that we bought, our bags are now marginally underwater. That's the way it goes, guys. We've never been under the illusion, and I'll be talking a little bit more about altcoins that I bought later on today, that we were going to be able to perfectly time the bottom. We've always said we'll take a stab at when we think it's a good time to enter the market, enter a investment that we think ultimately is going to do well over the long term. We've got longer term horizons for the crypto space. This is short term volatility and what I believe is now a broader uptrend. Still think Bitcoin's going to 45K. We don't think anything has largely changed. And this was something interesting that really demonstrates a lot of what we're talking about here. This is from Ki Young Ju. This demonstrates the statistical significance of, quote, the biggest BTC outflows on Binance this year. You can see the zoomed in version looks horrific. Just like the zoomed in version, if you were trading an hourly or a scalper, you would be, look at how bad this looks. This is brutal, right? Don't like grindy structure. However, very common with us that you do something like this. You might even put in a slightly marginally low and then climb out, or you can top out somewhere here. Look for these kind of scenarios to play out. Again, yesterday for me was a buying opportunity, but if you zoom out to the daily, doesn't look as bad. You zoom out to the weekly, doesn't look as bad at all. However, we'll see how the market's open today. You could have a bit of a weak stock market, which may weigh on things. Already vulnerable crypto market after Gensler's nonsensical attack. But again, zoomed in. If you zoom out, look at what you're getting. Things look okay, guys. Things look good to me. There might be a bit of dust settling that goes on after this. However, this largely hasn't changed the situation. How are the markets now looking at rates as a result of this? Well, they don't care about the cryptocurrency space. And ultimately, we do think, remember what happened to the markets when they went from 75 to 25? What do you think is going to happen when they go to 0 and they leave rates where they are? Remember, we've covered and we continue to cover. I wanted this to be crypto specific, but you still do have Yellen, who is set to draw liquidity out of the system through and dump lots of bonds onto the market and raise their capital and get their cash reserves back up. So that's going to be something we need to watch. But there's a whole variety of things going on right now, and this is what we try and do on this channel: is we give you that picture. You know, we tell you everything that's going on. We don't just look at crypto, because I don't believe you can just look at crypto. I think you have to look elsewhere. You know, of course, if you're a technical trader, you can just focus on crypto. But I do think that with all trading methods, there needs to be some sort of an understanding of generally where you are. You know, a macro picture, and you'll do far better. So moving on to actually yesterday's actions. This was just a smear campaign posted by the SEC, very childish. And of course, the SEC would go after Binance, given that it's not a US organization. But the reason it's not a US organization is because they pushed them out of it. Look at what they're doing with Coinbase, who said, we want to be in the US. And they sued Coinbase. What was the result of that? They sued Bittrex, they sued Bitfinex, they sued those guys. You know, we've been here 1,000,001 times, and I'm sure we'll be here again. And despite that, I don't think the price is doing too badly. Yes, there was a brutal day, but this is crypto, guys. You should be acclimatized to the sort of volatility that you get in this industry. If you're not, well, it's time to start. Let's look at a comment from CNBC. Very quick clip, and then I've got another clip to play for you of Gensler actually talking about 1/3 of the cryptocurrency market not being securities. He's very much changed his tune since then.
Let's talk about Gary Gensler and the SEC, okay? They tweeted out something today that included a profanity. They were quoting another quote that had the F word in it, which, you know, is pretty shocking for the SEC. Even quoting somebody else to be tweeting that out. You referenced the UAE, Hong Kong, Bermuda. You know, we know about the Bahamas. Do you feel like Gensler, who, by the way, came in with a lot of crypto hype and hope, right? He taught it at MIT, has been behind the curve and is now maybe trying to make up for lost time, so to speak?
Well, listen, I think he's in cahoots with Elizabeth Warren. She's effectively now the president for financial services. They're sort of riding around in the Batman and Robin car together. And so he's going to do her bidding, but it's not in the best interest of the United States. It's not in the best interest of the people that he's supposedly trying to protect. Moreover, if you look at that quote that he put out there, you know, listen, I can spot a publicity hound, Brian, because I primarily am one. I mean, but that's a ridiculous quote to put out there on a very serious case like this. He didn't give the complaint to Binance. He shared the complaint with the journalist community before he shared it with Binance. And so he is trying to assault Binance right now in the field of public relations. And I get that, but this is way more serious than that. This is about the future of digital assets in the United States. And the question is, will the United States continue to lead the world in financial services? And if we are, then we've got to have common sense regulation. And just go back to the 1930s when President Roosevelt said, okay, how do we regulate this? They put a commission together and they got advice from the industry. And of course, you know, we set up a self-regulatory organization, which is concomitant to the SEC. We're doing nothing like that in digital assets.
It's very interesting, isn't it? And of course, you know, this is part, don't lose hope on all of this, guys, because this is part of any new technology is getting regulated. We just have a particularly stubborn mule of a regulator in at the moment. If you look at the motoring industry, for example, you know, at one point you had to have 3 people to operate a car, and one person's job was holding and waving flags. You know, this is how it goes, guys. Take the positives from the negatives. Look at the fact that we're still early in terms of regulations. This industry is not even regulated. That's all coming. It will come, ladies and gentlemen. Enough people want it. It's the way that the world's going. We even saw China be a little bit more friendly towards all of this stuff. And you get to be an investor in something that's going to change the world before it's even been allowed to do so. You know, for me as a content creator, it's great because I've got lots of things to talk about now. You know, if you're DCAing, it gives you a little bit longer to do that. You cannot change the market, but you can change your own reactions. You know, one of the big benefits about being in a group like I have, the Patreon, is you're with a community of like-minded individuals. We weren't panicking yesterday. We don't panic on these kind of events. We expect them, we're used to them, and we deal with them, and ultimately use them to our advantage. And that's something that each and every one of you guys should be trying to do. You can't change the weather, but you can make sure that you're appropriately dressed when you step outside. I want to play this clip from Gary Gensler in his earlier years when he was teaching at MIT, talking about the crypto industry. Very contradictory.
So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities. Even in the U.S., Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about, 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate. But for 3/4 of the market, it's not particularly relevant as a legal matter.
Well, isn't that interesting that he should say such a thing? Certainly given as yesterday, in his SEC lawsuit, he mentioned Solana, Cardano, Matic, which is Polygon, Filecoin, Atom, which is Cosmos Hub, Sand, Mana, which is Decentraland, Algorand, Axel Infinity, and Coty, collectively the crypto asset securities. So, I don't want to provide too much hope here, but I believe he's referring to the derivatives market of these crypto assets. Okay, so I don't believe he understands blockchain well enough to understand what the ramifications to proof of stake cryptocurrencies are if you label them as securities. First of all, you can kiss goodbye to self-custody. That goes out the window. You can't self-custody securities. You can't transfer securities without a regulated brokerage. Every single thing you do is a taxable event. Proof of stake itself would become cumbersome, to say the least, impossible, to say the most. You know, the whole industry, if it just wouldn't work under the. It's not even practical to call these securities, let alone anything else that he's coming up with. So again, guys, objectify everything. Look at where we are in regards to the market. Is it that bad? I don't believe so. I think this is largely going to turn out to be a nothing burger. We'll see how the markets open up today. Ultimately, we do have the futures market slightly down. Stock market could be running out of steam or ready to take a break. Could take that break into CPI and everything next week that could send it. We will see. And then, of course, gold. We know what gold's doing. We actually spoke about the 200 MA yesterday, which I'll just bring up quickly. You have now broken below that. We did expect this to hold. We even made a video saying we think or in one of our videos, we think the MA traders are coming. We'll see. You know, watch what happens here. Do you wick back above it? What is going to take place? It's very interesting because if you look at the Heiken Ashes, we were actually getting a glimpse of hope with this weekly close, and then instantly, boom. That's how it goes, guys. We'll see what the day brings. We'll keep you up to date with it, of course, on a daily basis. If you've enjoyed this content, a like is always appreciated. So as a comment, check out the Patreon. If you're a Cardano staker, please do consider staking with the all-in pool. And on that note, I'm going to love and leave you. Have a triumphant Tuesday, everybody, and I'll see you in the next one. Thanks a lot for watching, guys. See you soon.